How to deal with high impact news releases when you're trading Forex. This is a question that I get asked a lot. And in today's video, we will see exactly how to deal with high impact news when you are trading. If you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis each and every day on all my platforms. So I suggest you subscribe and most importantly, you watch the video until the end because you will be learning some very important lessons. Okay, so this is how we will be structuring today's video. In the first part, I will show you exactly how you're supposed to be approaching the market when you have a high news release coming out. So the ways in which you're supposed to be approaching it depending from your personal exposure at the moment in the market. And next time that a high news release will come out, you will know exactly how to approach it. So make sure you watch the video until the end. And in the second part, what we will be doing is giving a full breakdown for EURCHF and what kind of capitalizing opportunity there can be on this pair. So make sure you watch also the second part. But let's start by the first part. So how you're supposed to be approaching high impact news releases in the market. So let's start by speaking about the different situations that you can have when you have a high impact news release that is about to come out. Well, there are different situations, okay? You can be already in a trade, which is, let's say here we have a trade and the red line is the market. So you have a trade that is running in deep profits and you have a high impact news release on this specific pair that you have already a trade running on it. Now, if you are in deep profit, what I suggest is that you move your stop loss couple of pips, usually 3, maximum 4 pips in profit, so that the worst thing that can happen if the news release for the pair is very bearish is that the market will melt to the downside and you will just exit the trade with few pips in profit that will basically cover up your commission and you will end up the trade simply break even. So if you have a trade running in deep profits and you have a news release coming out, go risk-free on the trade. Move your stop loss, couple of pips in profit just to cover the commission. What if you have a trade which is running slightly in profit? Now in this case, again, exactly same situation. It's best to protect your capital that you move your stop loss a few pips in profit, because if the market will melt to the downside during high impact news releases, what can happen is that you can get some slippage. Now, if you get slippage, basically your stop loss might not get filled exactly where it is placed. So you might end up losing more than what you had initially planned, therefore basically messing up completely your risk management. Just a quick reminder, make sure you comment below and you let me know which pair or topic you would like me to cover or analyze in the next video. The third situation that can happen is that you have a trade that is running at entry price. So you are already in the trade, but the market is still moving around your entry. Now in that kind of situation, what I really suggest is that you approach this in two main ways. Number one, you can just continue to run the trade and accept the risk that you can basically have your stop loss slipped and you can end up risking, so losing more than what you had initially planned. And the second option, which is the most conservative option, is just to exit the trade and then re-enter a few minutes after the news release came out, so that basically you protect your capital. That is the best option if you have a very big account. Just protect the capital, okay? It's the best option, is always to protect your capital and apply proper risk management. The third situation that can happen is that you have a trade that is running in some drawdown. So you are in the trade, but is unfortunately running in a drawdown, and you have a news release that is coming out in few minutes. Now, in this case, what I suggest is that you exit the trade. Why? Because if you have a trade that is already near to your stop loss and the news release makes the pair drop very, very aggressively, what will happen is that you can get your stop loss slipped also by double your initial risk, meaning that you can end up losing twice what you had initially planned, which is never a good thing. So in this case, I really suggest to protect your capital, to just exit the trade, and then after the news release comes out, you can just re-enter the position, okay? Very, very often you will be able to re-enter the position exactly where you had initially entered. What will happen? You will pay double commission, but it's very, very minimal compared to what you can actually expose your account to. So a double loss of what you had initially planned. So completely risk management ruined. So it's a good sacrifice, let's put it in this way, to pay double commission, but protect your money. So now that we spoke about the different ways in which you're supposed to be approaching a high impact news release, depending on what is your current situation in the market, let's make the full breakdown on EURCHF. Now let's start from the monthly time frame. Now on the monthly time frame, what kind of situation we have? We have a market that we have a monthly candle that will close in 1 day and 13 hours. Now, if the monthly candle will close like this is a very strong rejection of a level of previous support, which is now turned resistance at this area. So previous support, now turned resistance, aggressively rejected to the downside. Now, if you have an impulse that breaks below structure and you have a retracement and you want to measure this retracement, what are you supposed to be doing? You're supposed to be taking your Fibonacci from the high to the low of the impulse. And what you can see that the market went for a test exactly of this 0.618 golden ratio previous support, which is now turned resistance at this area. The market aggressively rejected it to the downside, and we can expect continuation to the downside to complete this impulse correction and impulse pattern to the downside. So on the monthly, if this is the way in which the market will close, we can definitely expect continuation to the downside. However, there is one thing that we can't ignore. We do have strong support at this level, which the market still is holding. We still have to see how this monthly candle will close. But this level here, which was very strong support here preceding all this move to the upside, is still holding the market here. So that is very important to keep in mind. Let's go down on the weekly time frame and see what kind of situation we have from a weekly perspective. Now on the weekly, if you remember, we wanted to see this move to the upside, and then from here we wanted to see this move to the downside. I will link both those analysis in description so you can see the complete reasons for which we were able to capitalize on the huge move to the upside. From here we said we want to see the retracement and then the continuation to the upside, and then from here we said we want to see the move to the downside, and in fact the market did it. But now let's speak about the current situation. I will link both those analysis in description so you can go and check them out and see the complete reasons for which we wanted to see these moves. So at the moment, as we were saying, going back to our analysis, on the weekly time frame, we have a market that after completing this M formation, okay, rejected the structure exactly as we wanted to see. However, the move to the upside that completed the overextended M formation was very impulsive. And after the impulse, the market created this correction. And after an impulse and a correction, you expect the market at least to try to make another impulse to the upside. So at least we want to see the market try to start a minor move to the upside. So a couple of bullish weeks on this pair. Let's go down on the daily. Now, before speaking about the situation that we currently have from a daily perspective, let's go and see what we have from a COT perspective, so commitment of traders. What big banks and institutions are currently doing from a euro perspective and what they're doing from a CHF perspective. So how are they positioned? Now, if we see what we have from a euro perspective, we can see that currently they have 190k long positions. So the non-commercials, the biggest speculators in the market, have 190k long positions and 72k shorts. So net positions are very, very bullish with 118k net positions. In fact, we have seen a lot of euro strength, and we have seen a huge shift from minus 114k net positions all the way up to 118k net positions. So from having way more shorts than longs from an institutional perspective on the euro to having way more longs than shorts with a 32.6% long exposure. Let's go and see what we have from a CHF perspective. Now on the CHF, we went from 8k to 1.4k, so a clear decrease. So we can expect CHF to get a little bit weaker in the short term. We still have more longs than shorts, but this is a clear decrease. So we can expect some CHF weakness, which could bring exactly the move that we want to see. Now let's go and see what we have from a daily perspective. Now on the daily, as we have identified already in our previous analysis on this pair, also here on YouTube, what did we say? We said, from here we have strong support. If the market will manage to actually create an equal high, then after the retracement, we can be looking for the continuation to the upside, and inside of this area, we can be looking for a potential trading opportunity. However, the market didn't give us the situation that would have led to a high probability entry zone. So obviously we can't be looking for the long yet, but we must adjust to the new market structure as traders. So how we have to adjust to the situation. Now what we can see is that in this move to the downside and approaching this support, we have seen a deceleration. The market made a move to the downside, very aggressive, move back up, so retracement, try to go lower, then again minor retracement, then again try to go lower, but again buyers are continuing to enter this market around this support. So we're supposed to see a proper accumulation here for a move to the upside. Now at the moment, as we are speaking right now, what could lead to a possible opportunity, because as you know, trading is reactive, not predictive, is seeing the market from here make a move to the upside. Why? Because if the market from here will make a move to the upside, then we will have the creation of a W formation. Now after a W formation, what do you expect? You expect the market to complete the pattern at the neckline. You know that the monthly time frame is pretty bearish. So if the market will create on the daily time frame this W formation, then with students, we will be monitoring price action here on the 4-hour time frame, because always remember, monthly, weekly, and daily is for direction. The 4 hours is for entry. So we will be monitoring price action with students inside of this area, waiting for the market to provide to us one of our valid entries. And as soon as the market will provide to us one of our valid entries, we will be taking a nice short with a very good risk to reward and very good probabilities for the move to the downside and completion of the pattern at the neckline for a nice move to the downside. And the neckline is obviously the previous resistance, now turned support. So if the market will give us this move, then we will be monitoring price action inside of this area for this possible short with, at that point, good probabilities and good risk to reward. Always remember, trading is reactive, not predictive. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find the link in the description. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them with me each and every day. In fact, I give you a complete market breakdown showing you exactly how to apply the strategies with entry, stop, take profit, and I also answer every single question that you have every day, including the weekends. So it's a very complete program. I suggest you go and check it out. Link is in the description, or I will see you in the next video.